Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's a bit like finding out your friend forgot your birthday, awkward and potentially a sign of bigger problems. We're looking at a filing from urban-gro Inc. and it involves a warning about potentially being kicked off the stock market. The main point of this report is that on April 16, 2025, urban-gro received a notice from Nasdaq, the stock exchange, basically saying, hey, you haven't filed your annual report yet and that's a problem. Companies listed on Nasdaq have to file regular financial reports with the Securities and Exchange Commission, or SEC, on time, and urban-gro missed the deadline for their report covering the end of 2024. This is a problem because of something called Nasdaq Listing Rule 525D-CC1. This rule says that companies need to turn in their homework, meaning their financial reports on time. If they don't, Nasdaq can start the process of kicking them off the exchange. Think of it like getting a detention for not handing in your assignments. So why was urban-gro late? Well, they had some issues with their past accounting. Back in August of 2024, they said they had made some unintentional errors in how they were accounting for taxes related to some past acquisitions when they bought other companies. They had to restate or fix those old financial statements. That took a lot of time and effort, stretching until February of 2025. This caused some delays in getting their latest annual report ready. To make matters worse, they also had some turnover in their finance department, meaning people leaving their jobs. All this combined to make them miss the filing deadline. Now, Nasdaq is giving urban-gro some time to get their act together. They have until June 16, 2025 to come up with a plan to get back on track. The company says they plan to file their annual report as soon as they can. If Nasdaq likes their plan, they might get extra time until October 13, 2025 to actually file the report. But if Nasdaq doesn't like the plan, urban-gro can appeal the decision. For now, this notice doesn't mean that urban-gro's stock will immediately stop trading on Nasdaq, but it's definitely a warning sign. The company also put out a press release on April 18, 2025, letting the public know about this notice from Nasdaq. They are trying to keep everyone informed about what's going on. Now let's move on to my thoughts about urban-gro. The fact that they had to restate their financials due to accounting errors is not a good sign. It suggests that there might be some weaknesses in their internal controls, which are the processes they have in place to make sure their financial reporting is accurate. The turnover in their finance department also raises concerns. It can be disruptive to have people leaving, especially when you're trying to fix accounting errors and get your annual report filed on time. However, the company is taking steps to address the situation. They're working to file their annual report as soon as possible, and they're communicating with Nasdaq. The big question is whether they can get their financials in order and convince Nasdaq that they're serious about complying with the rules. One of the biggest risks for urban-gro is that Nasdaq could ultimately decide to delist their stock, meaning remove their listing on the stock market. That would make it more difficult for investors to buy and sell their shares, and it could hurt the company's reputation. On the other hand, if they can get back on track and demonstrate that they have strong financial controls, they could regain investor confidence and improve their stock price. Overall, the situation with urban-gro is uncertain. They're facing some challenges, but they also have opportunities to turn things around. It's important for investors to keep a close eye on the company and see how they respond to this notice from Nasdaq. Thanks for watching. If you found this helpful, please subscribe, like and comment. It helps the channel a lot.